unemployment rates.
I call the Honourable Amy Adams.
Thank you, Mr Chair. Mr Chair, I want to follow on from my colleague Andrew Bailey and pick up some of the same themes that he's been mentioning, because there are a number of matters in this bill and in Part 1 that we're on that are of significant concern to the opposition. And they are worth just taking a moment to reflect on, because the Reserve Bank Act and the Reserve Bank is a fundamental pillar of our economic and financial systems. And actually we've got even Michael Cullen, back in his era as Finance Minister, making the point that it's so important that changes to the structure of the Reserve Bank and the Reserve Bank Act should only be made with bipartisan support. And we don't have that in this case, because these changes will weaken the independence and the clarity of function of the Reserve Bank that have served us so well for such a long time. And I would urge the current Minister of Finance to heed those words from Michael Cullen, Sir Michael Cullen, and reflect on the fact that when you are making changes to legislative instruments like the Reserve Bank, to do so without bipartisan support is a serious error, because it makes the Reserve Bank, frankly, a political football. And that is one of the major concerns that this side of the House have been expressing repeatedly about this legislation, and without, frankly, any interest or involvement or willingness to take on board our concern from the government, that this legislation runs the risk of seriously weakening the independence of the Reserve Bank. And even Adrian Orr, the current governor, has made the point on a number of occasions that a central bank's independence is critical to its operation and to its success. Now, when you have a situation where the Monetary Policy Committee is made up entirely of appointments made by the Minister of Finance and able to be removed by the Minister of Finance, you lose the very purpose of having a decision-making committee. Because a decision-making committee, the only reason for having it as being better than an individual making the decision is because you get diversity of thought and diversity of opinion and contestable ideas and a real contest of the issues. But when the appointment process is such that it can all be products of the same ideology, that very purpose is destroyed. And not only do you then have a committee and a governor who are appointed and owe their tenure entirely to the minister, you're now going to have a senior Treasury official. In fact, we understand it'll be the most senior Treasury official to begin with, the Secretary of the Treasury, sitting and partaking in all Monetary Policy Committee meetings. Now, again, the government has said, well, it's so the Reserve Bank can be better informed. But there's no evidence that the Reserve Bank has any issue getting information about Treasury's or the government's policies. In fact, both officials in the bank have been quite clear with us there is no problem to be solved. The only reason to have such a senior Treasury person in those meetings is clearly to influence the Reserve Bank, to influence their view of government policy. The Treasury are bound to give effect to the ministers and the government's policies. They're bound to put the spin on things that the government wants. And now they are very clearly trying to reach their tentacles of control into the Reserve Bank to stop issues like we've seen with Kiwi Build, where the Reserve Bank dares to come out with an opinion that cuts across the government narrative. Well, this government doesn't want that, so what do? They ensure that they have full control over the processes of appointment of the Reserve Bank, and that they have a Treasury person sitting in the room, making it very clear the message that the government wants to see returned. That is not an independent central bank. That is not going to serve the institutions of this country well. And I would say to the Minister that to have a situation like this, where there is, as I say, total control from the Minister in terms of the Reserve Bank Board, the Monetary Policy Committee and the Governor, and yes, I know there is interplay with recommendations between them, but when the Minister controls the appointments of all of those, that interplay is very quickly shown for what it is, which is a complete fallacy. Then even if the Minister carries out those roles responsibly and with good ethics and impartiality and seeking contestability of views, even with that, the perception will always be there of political influence. Now, I worry deeply that the perception will go further than perception and will actually see a drive to politicise the Reserve Bank and see people put in place for 10 years which will quite possibly survive this government. But even if that isn't the case, then I would say to the Minister, perception matters. And the perception under this legislation is a clear watering down of the independence of the Reserve Bank. It is not done on a bipartisan basis. There is no clear evidence of a problem they're trying to solve. And, Mr Chairman, this is a very, very poor... Mr Chairman?
The Honourable Amy
Thank
Adams.
you, Mr Chairman. It is a very poor way to go about reforming what is a crucial piece of our legislative frameworks. Now, the Minister, early in the process, certainly reached out to me, and I appreciate that, and I acknowledged that in my first reading speech, and I indicated that the opposition would work constructively with them and try and find good changes, and we think there are good changes to be made. I've told the Minister my view that I see that there is merit in a monetary policy committee. I think there are changes that can be made. This is not a case of the opposition opposing the legislation because it's government and we're opposition. I think there are absolutely areas where we could have worked together to come up with a good suite of reforms. But while I'm happy to work with the Minister, of course that doesn't guarantee our acceptance, and unfortunately these changes in these two respects go further than this opposition is able to agree to. The second aspect of that, Mr Chairman, is around this dual mandate. Now, I've been in umpteen meetings with officials and hearings and briefings where we have asked time and again, what is the problem we're trying to solve? What isn't working well with the mandate the way it is expressed at the moment, bearing in mind that the Reserve Bank has for many years already taken into account of a basket of wider economic considerations in setting their monetary policy framework. They already do this, and in fact, when we've asked the Governor, and we'll ask him again tomorrow, no doubt at Select Committee, he has said repeatedly, it's not going to change much, we can already do this. So what is the point of making the change? Now, here's the risk, however, of making the change. First of all, you're playing with a framework that is well established and that has held New Zealand in very, very good stead for a number of years. There have been a number of reviews of our monetary policy framework since the 2000s, and they have found that New Zealand has best practice set up in our framework. So why would you take a system that has served New Zealand well, that has delivered a very stable economic environment and has been held up as best practice worldwide, why would you take that and change it with no description at all of what the problem is you're trying to solve, and the bank themselves saying it won't change the way they operate? Well, and actually the risk, Mr Chairman, goes further than that, because not only is it a case of uncertainty and what might this do and why do we need it, actually you now have the very real risk, and again officials have confirmed this, that the Minister will now be able to direct the Reserve Bank not only to treat price stability and maximum sustainable employment on the same level, which we think is risky enough, because how on earth do you reconcile them if they pull in different directions? Not only will that be permissible, the Minister will be able to direct the Reserve Bank to prioritise employment over price stability. And in fact, the Minister could go so far as to direct the Reserve Bank, through Order in Council, to ignore price stability totally for a period of time. Now, what would that do to our monetary policy framework? This is a very real risk that the Minister has made no case for, and actually will create further uncertainty and weakening in our economic frameworks. We've already got a business environment where there is rampant uncertainty, and to now pull a rug out from one of the few non-political, well-functioning, bipartisan, non-argued pieces of our economic framework without any real reason is sheer madness. I really think it is sheer madness. What on earth will world markets make of a situation where our monetary policy framework can be reversed and thrown on its head by the direction of the Minister of Finance without reference back to the Houses of Parliament? Mr Chairman, I mentioned before that there is no clarity in the legislation or in anything officials have been able to give us on exactly how a governor or a monetary policy committee can and should reconcile those two competing aspects of their mandate should they find themselves in conflict. And it's interesting, isn't it? Because right now you could say we have a situation where the inflation forecasts over the forecast period in the latest monetary policy statement show that the bank expect inflation to be higher than the 2% midpoint. So they're almost forecasting they're going to fail to meet that target, and yet no move in the OCR. So then you start saying, well, why is that? Well, the question will always be there, Is it because the Governor now feels obliged to run the economy a bit hotter to keep the employment numbers up? Well, who knows? And I can only speculate, of course, what's in the Governor's mind, but that question will always persist. Is this the best thing for price stability and the stability of the economy? Or is the Reserve Bank now going to be delivering on its political imperatives?
I call the Right Honourable David Carter.
Thank you, Mr Chairman. And I have quite a number